Good morning and welcome to Morning Markets. Today we'll discuss the interest rate decision from the ECB and the ongoing challenges facing regional banks in the US. So firstly, looking at the interest rate decision from the European Central Bank. As expected, a 0.25% increase, taking the Eurozone interest rate to 3.25%. Interesting to note in the commentary from the ECB and in the press conference that went along with it, that they are still concerned about the rate of inflation, but more importantly, the speed of decline in inflation in the Eurozone. And really, I think Christine Lagarde summed it up quite nicely with one of her comments when she said, "We have more ground to cover. We are not pausing. This is extremely clear." So very clear guidance from markets really that interest rates in the Eurozone will continue to increase, and the market is pricing another 0.5% increase over the coming months. I think the other thing to note there, and why is this really important, is that for the Eurozone, if we look just back at April, the data that we saw, inflation was 7%. That had accelerated from the 6.9% that we saw in the previous month. So really illustrating that conundrum that central banks face. And whilst we might be closer to the peak of interest rates, much as we saw and discussed about the US yesterday, we're closer potentially with Europe as well. But what it likely means is that interest rates will stay higher for longer because inflation isn't declining at that rate that we might have expected. I think the other thing from the ECB yesterday as well was just a change in how they're going to purchase bonds. They're going to let a lot more mature. And again, that's a function or allows conditions to tighten a little bit as well to try and rain down on that inflation backdrop. As I said at the outset, the other thing to look at is just regional banks. Beginning of the week, we saw JP Morgan acquiring First Republic's assets from the Federal Deposit Insurance Corporation. We've continued to see quite significant share price volatility for the regional banks since that, and indeed since the problems that we encountered in March. That is something that markets, asset markets, but broader economic sentiment-wise needs to be resolved in the coming weeks. It's difficult to see how it's resolved. It is very much being really driven by a sentiment issue at this point in time, particularly as it relates to the speed of which deposits can move from these institutions, but also the concern that then brings from a liquidity perspective. Something that we and our investment managers are clearly focused on at this point in time. Just finally today, key thing to look out for is the US unemployment report for last month. Crucial really because the employment rate has remained really resilient despite some of these challenges we've been discussing. So expectations that we'll see a marginal change in the employment rate from 3.5 to 3.6%. I'll leave it there and we'll certainly cover that on Monday.